Okay, here's the grid drop script that I tuned up this weekend, and I created a Fibonacci tool to represent what it would look like if I dropped this ticket, this script. And inside the script, the very tip of your cursor is going to, when the market opens, you can't do it now, but when the market opens, this very top, if I'm going to buy right here on the top yellow line of these three horizontals, if I calibrate the fib tool, so this is 1 and this is 0 inside the fib tool. Since this is a 10 pip grid, this is going to buy a 20 pip zone. So inside this, the tip of the cursor is this. See if I can get that to stretch out. And this is going to be the way it's going to go. So I'm going to post this as a comment, the actual code, and what you do is you take the comment that I post about my own video. The first one's going to be the 50 pip stop to make 150 pips where your cursor is at. So when you grab that pending grid drop, it's going to put in an order right here. And it's going to put these guys spaced. Let's just imagine for the moment there is no such thing as commissions or spreads. Just for the sake of argument, a geometric perfect world, but we know it's not like that. This is still a 20 pip zone. So you're buying 0, you're buying 10 pips deep, you're buying 20 pips deep on this, on here. Then you're going to put the size here. I just put it 1K so that if you really want to get frisky, you can lay in multi-layers, and it's going to, you drop the same thing. Plus you know that you're risking $15 if they all fill. The market comes into where your cursor dropped the first order and 10 pips spaced apart, and it's only going to, if you drop it below current price, it's going to be a buy limit. Above, it's a sell limit, so it's bidirectional. If you really wanted to turn off one leg, it's possible, but I had a little problem rewriting the code on that. That's another step. I did name this, though, what it should be named. The comments are turned on to say what the ratio is over here. And you could put a / in the comment because it's not going to go into Windows. So I say it lasts for a day, and this is the ratio. These aren't correct because I only turned on the first four tickets. So I only rewrote the names for the first 4 tickets. So if you really want to get all crazy, you're going to turn all these tickets on. Space, but it's a bottomless pit. Right now it's just 3, because all you'd have to do to really load up, and of course you're stuck with the 50 pip stop. So in essence you have a 30 pip stop, because on the whole bank, because when the market plunges deeper than this, you've got 30 pip window before they start stopping you out of your first, and you start losing partial position from this one trade plan. And this is the fib tool settings. Internally look like this, where 0 is the third ticket stop, and then my next stop is 10 pips away, because when you drag the tool around, the value of 1 is this here. So this is this is 0, this is 0.10 representing a 10 pip. And when you drag that and it says 1,000, you know you're right at that. So that is that script. When the market opens, it's this one, top one, is the first one that will come in. So say you wanted to buy this pullback and you're like, I'm going to buy right around the round number, and they may not have filled you on that, but no worry, right? This is only a 3K, $15 risk, right? Which is my other video talking about trading at the market, risking $30 on a standard lot. What's your success rate there? What if you copy this and you drop? Now, inside here, I cannot make the spacing a half a pip inside the code, and it's not necessary to make it half a pip spacing on all these guys, because all you got to do is drag another order like this, and now you end up with this situation. Now, it might look insane. That is now a 9K. But what is your chances of getting in like that? And you could write the fib tool so it looks like that nearly. But here's how you're buying the half pips down here. So in the ultimate, and this is a triple your money, 50 to make 150. You can afford to get stopped out of this, because you're going to make it back. Now I'm just drawing this without regard to the grid, redrawing it. But you don't have to back test a 50 pip stop. The notion of back testing is complete garbage without regard to ATR. I can tell you that from all the testing, I'd say I got 1,000 hours of testing robots, and the one critical failure rate to any robot is too tight a stop or too wide. It's all about the stop. Always will be. Because if you can survive some of these swings, what if your stop's like that? You want to pick up 3 tickets on this drama all day? Yeah. This isn't all day. This is a 4-hour chart. I wanted to get this guy with the 3 pip stop into the view of, you know what? What if you put orders in every... Now I'm going to go back to what this ticket really is. Let's stay on the original plan. We're going to buy a 20 pip zone. Can you see any entries here? Hello? Maybe they stopped you out of this one. But if you can see what I'm saying, and you didn't even make all the pips you could have made on that. That's the scalp. You got an order like this. You got an order like this. How hard is it to come over and just like a slob throw in buy limits at support like that? Triple your money. Why not? I don't get it. That's how I trade all day long. I'll never go back to a bazooka trade. And how long do these orders last? Another key factor. Now, this is 1 day here, so you better be darn certain when you load these in. Of course, this is the 4-hour chart. If you're buying the edge of the week here, I mean, if you go to the 1-hour chart, so let's try to be realistic. Here's the 1-hour chart, and this is 1 day. Take your trusty risk tool, and this is not back testing, this is risk testing, or this is a volatility entry. You're going to buy at the Hundy here. At the end of the day, you made 100 pips with a 50 pip stop. Oh, wait, see. You bought a 20 pip range here. At the end of the day, you didn't double your money. You had to wait to the end of the week. What if I do have the other one I'm going to post here, which is the scalpish orientated one. and some guy that was bragging about the 25 pip stop, I built this just for him, if he's still watching. He was an inner circle. He's the one that ran to the electric fence. They threw his hat on the fence. 10 pip buy, the cursor drops at 0, and for the 5 and 10 pips, 25 pip stop makes 75. So without changing, the metrics are the same here. I'm not going to change the tool because all I got to do now is drag 0 point to the 50-yard line. When I see 50 show up on the, or 500 show up on the right side of the tool, I know that I have the 25 pip stop, and I'm buying a 10 pip range. 3K spread on a 10 pip range. This is a better fit. Could you lay that order wrapped around the 100-yard line, not get stopped out, and still triple your money? And ignore this top line here. This is not an order. This is just the way they're forcing me to cue the, I could say 100 there. Now, if you change the composition of this stop in relationship to the spacing, you change the whole metric there again, the whole dimension of that one drop. This could also be a 10 pip stop to make 15 or even break even. Now, it may be acceptable to have a couple. It's higher probability that you're going to make break even than you're going to make this outlandish triple your money. So you'd have to change all of the numbers in here to reflect that. So what I did was I put that at 0. When I get to my profits, which I call P1, P2, P3 corresponding 10 pips apart, we're making 220 pips off of that order that is E1. Entry 1 is going to be 30 pips below the 0 of this guy, which means I'm getting a, let's just say a 30 pip bonus. Add that to this number and you end up with 250 pips. All right, 250 pips away, or 250 pips from the what am I trying to say? Well, the last stop here, but your stop on the P1 is not, your stop at P1 is S1, which is here. It's 20 pips deep. So you're 20 pips away. You're getting 70 pips deep. You got a 50 pip stop. 70 deep with that, and you're going to take and go from 70. So you only have to go to 30. Then you see what I'm saying? 150 pips plus 70 is 220. Right? 220. Math's not my strong suit. I'll tell you right now, I look at the chart and I say, it looks like a buy. So here, and you could run it, if imagine you have this fixed, now this may be a 1 hour script as you start to tighten this up because you maybe don't want to be exposed. And if you ran this trailing behind the market, as the market's going up, instead of buying this, chasing it, you're running a trailing version of this behind it just to make your damn 75 pips. Now this is the Euro versus the Australia, which could be quite the gnarly pullbacks, and it's going to look like this. And maybe these things are evaporating every so-and-so. And maybe you're not going to get filled, and maybe they're going to come in here and blow out that whole bank. But when the ATRs heat up, if you came in with, so you're running, you need something that looks like this, and you would have to build that to the ATR. You're just about a 30 pip stop there. Here's the 25 pip stop. And they would have taken you out had you bought on these three, they wouldn't have taken out that last one. And if you really are going to trade like that, now mind you, this is triple your money. You could have made quadruple your money here in one day. So all you have to do is take this top number in the tool. So you take the tool, and that's your trade. That's a real trade plan, is a 50 pip stop. It's a risk plan, 50 pips to make 150 pips. Now the challenge is go on the chart and see where you need to place that to make that trade. Same thing on the sell side. Market's going up, and you're going to sell up here. Capture. You start selling these wicks, and they stop you out. And I don't even know. Now that you might need to run the, depending what time frame you're on. Now look at this wick. Are you kidding me? They would have stopped you out of that. The euro went nuts against our repair, but it was the border. If you're watching all these currencies, you can see it's right at the borderline. Duh. As soon as they break that, here's the. You'd have to be up here trading in a 20 pip zone around here, and you probably cashed out of that if you had the 50 pip stops. I mean the 25 pip stop to make 75. It's going to look like this, and you would have looked like a hero. You're out of that trade within a blink of an eye. I mean, look at the 15. You're out of that trade in 15 minutes. Sell, sell, sell. And we don't even know. We do know we get filled on these sells. We do know that. We don't know what the ask is. We don't know if the spread got so big up here that they blew that out. You don't know. If it's vibrating up here and the ask goes up and starts to spike up a little bit, 25 pip stop's not going to be good. So I created a whole library, of all these. I'm building a library of the universal limit grid drops. I say universal because if I drop it above, it's a sell limit. Drop it below, it's a buy limit. You can be very careful when you drop them right around the current price here. But are you really going to drop a sell every? Maybe you are. If you think you're right at the treetops here, and you're looking for a pullback like this, well then by gosh darn, you are going to put that order in like that. There's no doubt. There's no doubt you're going to say, well, you know what, it's time for that order. But what takes more effort? Putting on diapers and trading a standard lot, and just, because you're always constantly blowing out your colon on these trades. And the idea that you can accept I just doesn't bother me. You may have no emotion, but you got to have a little bit of a thinking ahead and the risk. So if you're going to buy down here in this trap, and you're going to build this is your scalp script, say, and that's triple your money. That may not even be enough for you. Take this and move it up to, I'm going to risk 50 pips to make 250 pips. So I go to the P on here, and I'm going to add 50 to this. I make 2.5 on my top ticket. No, I just screwed that up. It's going to be 3. I'm going to go for a huge win. 3.2. 250 pips with a 50 pip stop. I'll just add a 3 to the first number. And it's going to look inconceivable. It sounds inconceivable. But when the market's on fire, I don't see why not. Oh, did I just screw that up? I think so. Wait. It's supposed to be 3.2. Kind of jumpy, isn't it? I screwed that up somehow. Anyways, you get my point. Profits way the hell up here. Entries down here. Can that trade happen? Can you risk you're going to buy in at 10 pip window. These are your entries. I somehow duplicated the exits there, but so here's your risk. Here's your entry window, 10 pip window with a 25 pip stop. Your profits down here. Now that's a trade. In the 250 pip, it looks like this. I mean, with the 50 pip stop, it looks like this. You're going to buy a 20 pip range. And did you hit your targets? Yeah. So you have to wait a long time for that trade to pay out. Here, you made it. You made that money. If you waited here, and that's just trading with that. Now I could change the, if it was break even, maybe the stop's down here and the profit is, so the break even thing is silly because there are trades like this where you're buying a 10 pip range here. By the end of the day, so you're risking 25 to make 150 pips. I think 125 pips, something like that. That's a good ratio. That's a great trade. Even on the sell side, look at that. Profits hit. Euro to Australia, mind you. Spread not so good. 3 pip spread. So it may look glamorous, but you better be out of that trade by the time the session closes. And I don't know how tight it is during the open. I don't trade this pair. Look at this ricochet off the 100. Does it respect the 100 or does it respect Fibonacci? Obviously respects the 100 pip. Top bottom at the 100, to the 100, to the 50, to the 100, to the 100, to the 100, through the 100 to the 50, back and forth. I don't have a 50 pip on top, but you'd see complete congestion, turnarounds at the 50, reversal areas. There's the 50. There's the 50. You could put a blue 50-yard line in there. It's just about price. It's a Brownian motion. Your classic, you know. So I'm going to put that up. It's going to be, comment one's going to be the, and I'll put on the high tail, I guess, too. I could put everything in there. It's just that for the people that don't want to go through the drama, you just take this, you hold down the control key, you hit A. You can't do that. You'd have to drag the comment. Then you go to the trusty, hit F4 on the keyboard or go up to tools, open this up, and create a new script. So here you'd say File, go to New, go to Script, go to Next. I'd call it, I just call it Grid Drop. Or Drop Grid. And Finish. Now here you're going to Control A. Delete all that code. Go back to the, or take your comments. Hit. So you have, you've highlighted the comments. And then you hold down Control, hit C. Come back to the fresh. At this point, it's pre-named. Hit Control V, comes in. Now you go to the compile button, and boom, it should show up inside of the script directory on the Navigator platform. On the Navigator section here, if you go down to where the scripts come in, and you should see grid drop. And if you hit enter, you can edit it here. So that is it lasts all day. It covers a 10 pip window. The cursor tip is at 0. You have a 25 pip stop, a 75 profit. I just fucked that up. The other one's outrageous, but you can, without adjusting this, you can play around with the ratios. You're stuck unless you change this, but you'd have to change the sell side also. So you can make this span a 50 pip with a 300 pip stop. You drop that in there, and maybe you make it last a week. If you scroll down to here, you'll see the weekly, you see the time frame here. And you can change you're going to change the ratios. I actually went and changed this to the 25-75. Lasts for a day. If you're paying attention to that in the platform when you see the order launch, so terminal window, if you turn the comments on, you'd see here the notation. And if it says TP, it means it took profit on the way you wrote the script. This one, I bailed before it hit the take profit, so you don't see the little TP in there. So that's how I'm going to do to save to admit that I don't know the precise time and place, and even that's what they say in the Bible. Nobody knows the exact time and place. That was the first the religious observation of quantum mechanics, is that there is no point zero, there is no exact, everything's vibrating on some level, and your server connection speed. I talked to a guy that was saying he wouldn't trade unless he was close to the servers. I don't know how that, on a pending order, that does not matter. In the high frequency trading, that's all bullshit. If that's your excuse for not making money because there's high frequency traders and the banks and all that stuff, well, the banks, listen, they're idiots. There isn't some guy working for some, it's schlock. They're making 5 to 10%. The retail trader has the advantage. You don't have to follow prop house rules. These prop houses are a joke. That Dante guy quit. Anybody with half a brain, once you figure out how it's going, you set up your own coffee shop. If you can see the mistakes other people have made and the stupid decisions they've made. How about Coca-Cola? Coca-Cola is going to come out with a better tasting Coke. You know what they did? They spent millions of dollars hiring taste testers and giving a survey. And they are so blind to the fact of how the body processes that they're selling samples. I mean, they're testing people on a sip, not a drink all day. A sip. Well, everybody's going to take a sip and go, not bad. How about you drink that whole thing? You know what? Too sweet. Pepsi's not as sweet. It's a whole misguided calculation from the big boys. So I say fuck the big boys. Just like I say fuck the trend, I say fuck the big boys. I'm posting these comments of the scripts.